Today, we're plunging into the really high-stakes world of critical mineral supply chains. We're focusing on the metals company, TMC.
Right. And TMC is essentially a pre-revenue venture right at the center of this huge, maybe $30 billion tug-of-war over deep ocean resources.
And that's reflected in the stock, isn't it? It just skyrocketed up over 209% in the 6 months before Q3 2025. So the big question for you listening is that massive rally justified by their, well, incredibly aggressive strategy to start mining the seabed?
It really is the ultimate energy transition bet, you could say. TMC is targeting these polymetallic nodules down in the Clarion-Clipperton Zone, the CCZ. They hold just massive amounts of nickel, cobalt, copper, manganese.
These key battery metals?
Exactly. And with EV battery demand projected to send nickel needs soaring, maybe 60%, well, TMC has the resource.
Yep.
But the clock is ticking,
Yeah.
and speed of access is absolutely everything here.
Okay, let's dive into that speed issue then. TMC clearly got, let's say, frustrated with the slow pace of the global regulator, the International Seabed Authority, the ISA.
Yeah, the ISA, it could take another, what, 5 years maybe, to finalize the actual commercial mining rules.
Yeah.
It's a long haul.
Wait a minute, though. If the ISA is the recognized international body, isn't going the separate U.S. route, just painting a huge target on their back, why risk all that international backlash?
Well, that's the gamble, isn't it? It's the whole strategic play. They made this huge pivot. They created a U.S. subsidiary specifically to pursue permits domestically.
Domestically, how?
Under pretty old U.S. law, actually. The 1980 Deep Seabed Hard Mineral Resources Act, let's just call it the 1980 U.S. law, it's overseen by NOAA.
Okay, NOAA, not the ISA. And the difference is...
It's potentially staggering. The ISA, like we said, multi-year bottleneck, this domestic NOAA review process could be maybe just 90 days.
90 days versus potentially 5 years. Wow. Okay, that's a massive difference.
It could save years of delay. That's the hope.
And it's not just paperwork, right? They've been making real operational progress, too. I saw they completed pilot runs, actually turning nodules into high-grade alloys over in Japan.
That's right, with PMCO. And that was crucial. It basically proved the whole industrial pathway was feasible. From extraction on the seafloor all the way to refining the metals at scale.
So that definitely reduced a major risk for investors, showing the tech actually works.
It did. That technical validation, plus they secured a strategic, what was it, $85.2 million investment from Korea Zinc.
Ah, yes, Korea Zinc, big player.
Definitely validates their vision somewhat. But that 1980 U.S. law immediately ramps up the legal and, well, geopolitical heat. And then you have the recent U.S. executive order supporting faster deep-sea mining permits. It just sets up this clear dual-track system.
U.S. action versus the ISA's international mandate.
Exactly.
And this is where the real controversy kicks in, isn't it? Critics are pretty loud, arguing that unilateral U.S. permitting just violates customary international law. It kind of rejects the whole principle that these resources are the common heritage of mankind, right?
That's the core legal argument against it, yeah. The 1980 U.S. law is seen as provocative because it tried to authorize mining in areas the global community basically said belong to everyone.
A shared resource.
And that legal fight is tied directly to the environment. It's why you see over 40 nations, plus huge companies like Google and BMW, either opposing this unilateral path or calling for a moratorium.
Because the environmental risks are potentially huge.
They could be.
Yeah.
Mining could destroy unique deep-sea habitats. Some scientists estimate maybe 30–40% of species in the CCZ depend directly on those nodules for habitat. And then there are the sediment plumes. They could just smother marine life over vast areas.
Okay, but to be fair, TMC has a counter-argument, right? They argue their deep-sea method actually has a lower environmental impact overall compared to traditional land mining.
They do. They cite reduced CO2 emissions and, crucially, no need for those environmentally risky tailings dams you get with land-based mines.
Which can be disastrous, so it's a complex environmental picture.
It's a powerful argument for TMC, certainly. But even if they navigate the regulatory maze, there's the cold reality of their finances. TMC is pre-revenue. That means massive development risk. They reported a net loss, I think it was $74.3 million in Q2 2025.
Oof.
Yeah, and they need substantial more financing just to get production started. It's capital intensive.
And here's another risk, maybe a structural one that gets overlooked sometimes. TMC is betting the farm on nickel and cobalt demand staying strong.
Right.
But look at LFP batteries, lithium iron phosphate.
Ah, the LFP chemistry. Yeah.
It's exploding. Now over 42% of the global EV market. And crucially, LFP needs none of the metals TMC is targeting. No nickel, no cobalt, no manganese.
That's a really significant point. That growth directly challenges the bull case for nickel especially. It's shifting the standard.
Definitely shifts the ground under TMC's core product.
So at the end of the day, you have this fundamental tension, don't you? The, let's say, urgent strategic need for critical minerals to fuel the energy transition
Yeah.
versus the critical need to uphold international environmental rules, especially in the global commons, areas that belong to everyone.
So here's the final thought for you to chew on. If TMC actually pulls this off, if they use that fast-track 1980 U.S. law to start commercial mining, does it set a dangerous precedent, undermining global resource treaties? Or does it just force a necessary acceleration of the green energy supply chain the world desperately needs?
That really is the billion-dollar question, isn't it? And the future of the oceans might hang in the balance.